Hey there. I would like to welcome to this Startup Money Playbook series that I'm starting from today. And essentially, the genesis of this is that, I've been, uh, you can say, mentoring a lot of startups over the past several years. And one of the things that I found is uh, while, the journey of starting up is really, really difficult. Uh, at the same time, there's one point where most of the startups, in fact, aspiring entrepreneurs, everybody they struggle is understanding the finance, which I feel is extremely important. At the same time, it's quite easy. It's not very difficult. So that's the reason that I'm doing. My name is Amit Singh, and this particular series is for, in fact, anybody. Like, if you're in class 8th, if you're a college student, if you're a founder, if you're aspiring to become a founder, you could be an investor, you can brush up everything, right? But largely professionals who really want to switch their careers into new roles of becoming, entrepreneurs in this AI era. You could be professor or teacher, it really doesn't matter. So that's where it is, and I once again welcome you. Let me just give you this whole breakup. What I've done is I'm going to give you some 30 sessions, right? So, and there's one big idea that I'm going to touch upon is money is also a skill. It's actually a skill. It can be taught, it can be learned, right? So therefore, as I mentioned, this particular thing is built for absolutely everybody. That's one. Most of the examples, in fact, largely the examples that I'm going to take here is India specific. So anybody who really wants to, start up in India or understand the finance will be very useful. You all know that India stands at number 3 when it comes to startup ecosystem, and I think a lot that you have done. I've written a book also on this, so you can actually check that out in Amazon. It's in Kindle currently, right? Okay. Uh, every session is going to be for 1 hour. One big idea that we're going to actually touch, right? And there are a lot of tools. So I'm also going to give you a lot of Excel sheets where you can actually just play with these, numbers, right? So this is what you actually see on the screen. Sessions 1 to 4 basically talk about money basics, right? We are going to touch upon revenue, profit, cash, time value for money. So currently you're here because we're going to do this today. Sessions 5 to 8 will all focus on costs and pricing. You must have heard of fixed cost, variable cost. Sometimes there are confusion, so we're going to resolve that. There's something called break even. Unit economics is very common. You must have heard while watching episodes of Shark Tank. Then sessions 9 to 12 are all about financial statements, and these three statements that you actually are going to read, you will become pro. One is the profit and loss statement, second one is the balance sheet, and third one is cash flow. These are really, really important. Sessions 13 to 16 are, we're going to talk about runway and survival, where we'll touch upon burn rate, forecast, what are the early signs, signals where you can then think of raising money or what you have to do so you can take a lot of informed decision. Then sessions 17 to 20, it's all about raising capital. And this is where we'll talk about what are the funding types, what is this term called valuation, and what is a cap table, and how you have to actually work on your cap table, equity distribution, and all that. Then sessions 21 to 24, what happens once you get funding, for example, right? That's very important. Then sessions 25 to 28, we'll obviously discuss some 10 templates. But let me also tell you that these templates we will introduce much before, as and when they come, and I'm going to definitely introduce, right? And then it's all about, the templates are there. Please build your own, financial plan, whatever. So let's get started with this, right? I've also tried to put up a breakup of the entire 1 hour session. I may not be exactly precise, but I'll try. I mean, the first 10 minutes, I'll definitely talk about the big question, which is why do smart people make terrible money decisions? It is just to create that enthusiasm, that motivation. I'm also going to talk about money as a language. Money is, in fact, a language, right? For the next 12 minutes after we have finished the first part. We'll also talk about the three confused words, right? So which means that revenue is not equal to profit, and profit of course is not equal to cash. Okay, there are some five money mistakes that people do, right? There are some patterns that you'll actually observe. um, then what's your first step, what you're going to do? Very simple habit that you to adopt for the next 4 weeks. Just use one number, and you can actually think of. If you have any questions, any comments, you can put it, and maybe in the coming session I'll take this up. Right. So essentially, by the end of the session, you will have understood why 80% of businesses fail financially. You will never confuse between these terms: revenue, profit, and cash. You will spot your own money blind spots. That's very important, and you will have one action step to take tomorrow. Okay, so let's start the first part of the question, the big question: why do smart people make bad decisions? In fact, when we say smart people, I mean anybody, I mean any professional, be it a doctor, an engineer, MBA graduates, I mean, right? A lot of people, they max out credit cards and all that. So let's find out why, right? Because the biggest problem that we have seen, right, and I'm not criticizing here, all I'm trying to say that either we as students have not given much importance to learning about finance, right? That's one. Or perhaps in our textbooks in our schools we have not been taught, or these things were not there, because we always focused on learning about algebra and calculus, history of empires, laws of thermodynamics, maybe Shakespearean poetry, cell division biology, periodic table, whatever. But once you enter in any profession, any career, think of any career, right? You will have to deal with finance, and you will say, "Oh, come on, I'm a singer. I mean, why should I deal? There's a CA, right? There's a manager who's actually managing. There's an accountant I've hired." That doesn't work, right? You should, today at least, you have to be an individual contributor. How you should be able to read your bank statement, right? What EMI really costs you in total, how GST and income tax work, revenue versus profit versus cash. At least these basics you should know, right? And obviously how to evaluate a business idea, okay, whether to invest, save, or both, right? Let me just make one thing clear, that this is not going to be a series on investment or anything. It's about understanding the basics of finance, and over a period of time, once you master it, you will definitely, if you want, you can actually learn other courses. But for now, you should be through with the details with practical sessions, right? uh, some reality I want to present, right? As I mentioned at the beginning, it's great to hear that we stand at number 3 when it comes to startup ecosystem, which actually means that we have got the third largest number of startups that we have in India, and a lot of unicorns. You must have heard, startups which have been valued at more than $1 billion. For some of you who might be listening, these words could be a little confusing. Just don't worry, relax, okay? Right, yeah. So I was just saying that it's all good to hear about India, which is actually true also. But in reality, and you can Google and check, 27% is actually our financial literacy rate. What does it mean? It means out of every 100, 73 people don't know about it, right? That's one. And largely, must 90% of startups fail in 5 years. There's multiple reasons. One strong reason for most of the startups failing has always been a product market fit. But I'll tell you, even if you achieve that, but you don't have financial literacy, or you don't take informed decisions, the startup is going to fail. And this is what is. So that means number one reason actually is the poor financial management, and it's not about the bad product or idea. Okay, we don't know how to do our retirement savings, right? We completely rely, at least the professionals, so we rely on our company, and they will open our EPF and everything, and right? So that's what it is. And then it's all about 76% revolving credit. Pay only the minimum amount due and trapped in, high interest debt cycle. I mean, so you receive every time your credit card bills, and there's a minimum amount that you have to pay, and there's a full amount. So you feel that, oh, let's pay minimum amount. The good news is financial literacy is not a talent, first of all. So those of you feel that, oh, finance is not my cup of tea, no. Anybody can learn finance. That's a skill, just like any other skill. So skills can be learned, and in 30 hours, 1 hour at a time, you don't have to read everything together. Okay, you can, because it's already there. But I think let's learn, slowly. Okay, so 1 hour at a time, and you will move from zero to investor level financial fluency. That's exactly why you're here. Part two, where I am going to talk about money, is a language. Okay, like any language, and you can relate it with my previous slide as well. Okay, you can learn to read it. So what's the purpose of the language? When you learn a particular language, you can actually speak, you can communicate, you can read it, you can understand it. So similarly, money is also a language. Eventually you can start thinking in that. So the first three words for this language is revenue, profit, and cash. Okay, now the three most important words in business that we just discussed, right? Most people think they're same, but it's actually not. Look at this slide. Okay, let me just go back. Yes. So revenue, very simple. Revenue is the total money customers pay you before any deduction. What does it mean? Very simple. You have created an app, right? And app has got particular feature which you actually want to sell. Let's say there are some notes. You're a student of a particular class, and you've created an app, and there's some notes that you want to sell. Okay, so everybody who downloads that material will have to pay 99 rupees. Okay, so which means that every download costs 99 rupees. Let's assume that there are 1200 downloads. So 1200 downloads multiplied by 99 is 1,18,800 rupees. This is the money that you have got from your customers. Okay, you're selling t-shirts. Let's say you sell one t-shirt at 400 rupees, and you have sold 100 t-shirts. So 100 multiplied by 400. That will be your revenue. Okay, so don't feel happy in that sense that, hey, I've got this much money, now I can go and spend it. No. So that's called the revenue. Okay, and it's always written on the top, and therefore sometimes it's also called the top line. And you also use the term called sales. So what's my sales? So for this example that you see, my sales is 1,18,800 rupees. But what's the profit? Because that's what really matters to me, right? So revenue minus all the costs. Okay, it could be cost of creating the app, maybe it could be cost of the salaries, because there are people who might be working as interns, you might have to pay. There are some server costs, anything. If you're working in a hotel, right, and there's a certain revenue after certain orders that you have got, so you'll have to actually reduce cost of making that particular dish, the salaries, the rents, taxes. There are terms like depreciation. If you subtract all this, you will get something called profit. Let's assume for a moment that the total cost is 50,619 rupees. Okay, so this is the money that is going out of your pocket. What are you left with? Out of the 1,18,800 rupees, you're left with 68,181 as profit. Sounds good, quite good. This is positive. First of all, you have money, and this is something that you can actually use. But hang on. Is it the same amount that's there in my bank account as cash, my own money? Right, that's the question. So the actual money sitting in your bank account is the cash, right? Now here is the catch. First two slides, okay, first two boxes that you saw, now you look at the third box. Customer owes you 99 rupees. Okay, pays in 60 days, which means you have given the download and you know that I'm going to get my 99 rupees. You have not gotten 99. So your revenue was 1,18,800 only on paper, right? But not exactly in your bank account. You still have zero money. Okay, so we will clear this. We'll understand this much better. So a startup can be profitable, which you saw the middle box actually says, but still run out of cash. And when there's no cash, it actually is going to kill the company. You need to have cash. Okay, let's take one example, kind of some. So let's take an example of a girl named Priya, a lady named Priya, Priya's restaurant, and it's actually profitable, but she cannot pay staff salaries. Okay, that's the point. So her story is very simple. She opens a restaurant. The first month result is 100 tables got served. Let's say the average bill was 500 rupees per table, which means she earned a revenue of 50,000 rupees. Good, right? And the cost, I mean, cost of food, staff, rent, utilities, everything, 38,000 rupees was there. Okay, and profit was 12,000 rupees. Looks great, but her bank account somewhat shows 2,000 rupees. So there's a deficit of 8,000 rupees again. Why? Because 60% of customers are corporate, which means they are on 30-day credit. They will eat. Okay, 60. So out of 100 tables, the 100 orders which got served, right? 60 of the orders were on credit. Okay, and the money that she's going to receive, 30,000 rupees that she's going to receive, will be towards the end of the month. But her vegetable vendor is not going to wait. Okay, she wants money because the seller doesn't have money, so she also needs, let's say, so she cannot make payroll. She means here Priya cannot make payroll this Friday. Priya is profitable, at the same time she's broke. Very simple. 50,000 rupees profit, 12,000 cash in the bank account is 2,000 left. Okay, so what are the 5 money mistakes? You must have seen a lot of patterns. Some of you watching might have probably felt actually, right? So the 2 mistakes that kill most early businesses are confusing revenue with cash. Just like I said, a founder celebrates, very simple, we cross 10 lakh rupees revenue and immediately hires 3 people, upgrades the office. The problem is 70% of this revenue is not exactly in the bank account. It's going to come after 60 days, okay, or on the 60th day, right? Because these are invoices that you've issued. The cash hasn't arrived, so 2 months later they can't pay salaries. This is the number one cause of the funded startup failure in India. Okay, don't get confused with revenue and revenue with cash. Okay, the second one is growing without knowing your margins. Right, we'll understand what this margin is, but before that, so a restaurant gets more customers, great, but the owner doesn't know his food cost, right, is 65%, which means what you're going to make money is out of the left 35%, which is so small. So the more customer he gets, the more money he's actually going to lose. So scaling a business without knowing your margins is like driving faster in the wrong direction. You just crash harder. Okay, there are 3 more patterns that repeat across every business. The third one is spending money that belongs to the government. So you must have seen that when you order something, right, and they issue you a bill, in fact, the bill has got 2 parts. One is the exact amount, and there's something called GST in India, right? That's the taxes, okay? So which means that the money that you have paid overall, out of that, the GST amount is not the restaurant's amount. It has to be paid to the government, okay? So when you collect the GST from customers, it's not your money. It's an advanced income tax that you should pay every quarter. So many founders spend both on operations and face a very huge catastrophic bill. It could sometimes come out to be 4 to 8 lakh rupees, surprise. Right. Fourth one is no runway calculation. Okay, most founders don't know how many months of cash they've left. So you should always have a complete idea of how much money I have in my bank account, so that even if I don't earn a right, I can actually survive. Okay, so you should have that understanding. Every business should know its runway to the exact week. Okay, when crisis hits, there's often only 3 weeks of cash left sometimes. Okay, by then options have almost entirely disappeared. The last mistake, the fifth mistake, is mistaking one good month for a trend. Okay, and it happens particularly in restaurant business. Oh, today I've got 10,000 rupees sale. Right, every day it used to be 3,000, but today, and you'll try to find a pattern. And so one great Diwali season, one viral post, one big contract doesn't make a business. And with that, you can then take decisions. So let's hire 5 people, let's buy more chairs for a restaurant or tables for a restaurant because we couldn't serve properly today and there were a lot of people waiting outside, so all these things, these are wrong decisions. Okay, so hiring 5 people based on one great month is how startups collapse. Revenue must show consistent month on month growth before major decisions are made. So many things so far. No worries. Again, this is for everybody. This is for a school student. This is for you if you're in grade 8 to 12. This is for college students, for working professionals, as I said, for startup founder, of course, for teachers, professors, and corporate manager. Okay, all you're going to study is understanding money before adulting begins, and it especially is for school students. But for college student, you can actually validate your unit economics before building something. For a working professional, building a business financial plan that actually works for you. And it could be for your personal, could be for your company. For startup founder, you should be able to read all the three statements, and in fact, you can build real forecasts and take informed decisions. Then comes for teachers and professors. The challenge is teachers subjects teachers so a teacher teaches subjects but not financial in reality. So take real examples. Okay, right. So you can actually deliver financial literacy to hundreds of your students. Maybe you can have, right, you can master this. You can be part of their startups, maybe as advisors sometimes, or mentors. For corporate manager, it's very simple. The corporate manager links team action to profit and loss impact confidently after this. There's one example that I'm going to take throughout the session, and it's a hypothetical example. So I have a character by the name Aryan Sharma, and Aryan has started one business in school, and it's a startup. In fact, it's an app. It's called Study AI, where he sells CBSC, notes, right? So simple. This is, and we're going to take his numbers and let's see what happens. Okay. So at the beginning, maybe starting from 10,000 rupees to 75 lakh that he raised. So this is a snapshot of this. These are some assumptions that we've taken. He starts with 10,000 rupees personal capital. Obviously would have taken from his parents. The product is very simple: digital CBSC notes at 99 rupees. The first month revenue is really good, right? 19,800. After 6 months, it is 1,18,800. So 6 times kind of growth. And towards the end, right, his net profit is 5,45,568, which is really, really huge. His gross margin is 96.5%, which is exceptional, which is very good. And that's what we will also see, what kind of ventures or ideas or businesses actually generate, huge margins, right? And at seed round, 75 lakhs. This is the first round that he's actually raising, formal round, right? At a valuation of 3 crores. Don't worry about what are these jargons, because we will demystify these jargons very soon. Okay, so your first step, and that starts today, that starts now, right? One habit, one tool, one number to track. That's all it begins. The Monday that's going to come, Monday morning, make it a habit. Okay, invest 5 minutes, and that's going to change everything. What you need to do is, right, under just look at your opening cash balance. Okay, what's the total money that you earned? And it could be any, so when you must be saying that, okay, I don't earn money. You may be getting pocket money, can, right, or you might be earning, or you might be starting up where you might be spending. Just see the total money which came this week and the total money which went out that week, right? So in, if you remember my revenue, profit and cash slide, right, in is that income sort of, that revenue sort of, let's not mix words, but that's what. So all you have to do is see your opening cash balance, how much money you got in a week and how much went out. Okay, why do you want to do this? Because after doing this, you will never be surprised by your own bank account again. There is a pattern that will become visible within 4 weeks. Where is money really going? You'll be able to answer. And every major financial decision becomes easier when you know your numbers. Oh, every month, I think I invest a lot in hangouts, I eat outside, I watch a lot of movies. And that's why. It could be anything. So this is going to be the foundation for everything else in the series, right? And this is that template. You can actually download it. Okay. Yeah. So don't download it from here. That is, there's a link that I have already given, right? It's the Google Drive link, so you can download it from here. Okay. Uh, let's look at very simple. So week one, what's your opening cash? Let's say 10,000 rupees. Money in, you got 5,000 rupees. Money went out, which is 2,000 rupees. So what is your closing cash? In minus out. Okay, so just think about it. One key observation, maybe you will say 2,000 rupees on food I didn't need. So likewise, observe. A very nice wisdom to remember, what the most financially successful people say, and you all must be knowing about this. Let me start by what Robert Kiyosaki actually says in his very famous book Rich Dad Poor Dad. It's not how much money you make, but how much you keep, how hard it works for you, and how many generations you keep it for. That's very important. Okay. A lot of CFOs, a lot of people actually say revenue is vanity, profit is sanity, and cash is reality. And that's the foundation that I'll start with. Okay, Nandan Nilekani, very famous co-founder of Infosys, also said, financial literacy is not an option in the 21st century. It's actually a survival skill, right? So what you learned so far, very simple. Money is a teachable skill. It's not a talent. It's not for some people. It's in fact for everybody at any stage, at any point in time. Okay. The second lesson that we learned is revenue is not equal to profit, is not equal to cash. These are all different things. Okay. The 5 mistakes that need to be avoided. First one is confusing cash with revenue, then scaling without margins, spending tax money, there's no runway, 1 month thinking, all avoidable once you see them. And your first action starts this week that I said. Write your cash balance every Monday, track inflows and outflows, do it for 4 weeks, download the template, or you can actually design it yourself. Everything will change. Okay. In the next session, we will definitely deep dive into revenue, profit, and cash. Okay. We build Aryan's first P&L from scratch, line by line, and by the time you would have left, you would have understood everything about profit loss statement. Okay, what goes on into an P&L? That's one, that is revenue, COGS, cost of goods sold, profit, gross profit, operating expenses, EBITDA. There's a very common term that you might be hearing these days, earnings before interest, taxes, depreciation, amortization, the depreciation of course, and then net profit. Why margins matter more than revenue, right? Which means 100 crore rupees business, right? A business that has generated revenue of 100 crore at let's say 2% margin versus a business which has generated 1/10 the revenue, that is 10 crore, at 60% margin, which is better, right? And obviously study AI's, month one P&L live, some real numbers to put it, and then you'll understand it. Session one is complete from my side. I hope you enjoyed. Do like, subscribe, and give your comments. Okay, I'll try my level best to improve in the next session. Thank you very much.